the market condition, home sales so far this year has been difficult. In fact, the past 2 years has been at the historically low level activity because of high mortgage rates. But the mortgage rate in the second half of the year looks to be a little better. Federal Reserve will surely cut interest rate at least from September and onward. When the Federal Reserve cuts interest rate, it is never one and done. And the reasoning for the rate cut this time around, this year, will be for the right reasons. Last year, when Federal Reserve cut interest rate in September, it did not do anything. It did not help the mortgage rate. But this year it will, because the reason for the rate cut is calming inflation. Tariffs will elevate inflation, but that's the only thing that's been discussed out in the media or constantly. But there are other forces that will counter tariff pressures. For example, we are finding that the shelter cost component, which is the heavyweight driver of the consumer price inflation. Everyone talks about the price of eggs. Egg is irrelevant. It is less than 1% weight. To be precise, it is less than half of 1% weight to it. But the heavyweight is the shelter component, the rent component, comprising about 1/3 of the weight, and it is showing great deceleration. Many markets, Charlotte, Atlanta, Salt Lake City, Austin, overbuilding of apartments, so many new apartments coming onto the market, rents are no longer rising. This will have a great decelerating impact to the inflation. And furthermore, President Trump is a deregulation person. Some of the deregulation, for better or worse, at least it will lower the business operating costs, and that will be passed on to some consumers. Lower gasoline prices already back to pre-COVID condition. I know the realtors drive a lot. That will be helpful. But for American consumers, all the products that are being delivered on big trucks, 18-wheelers, well, lower costs could bring the cost down condition. So we believe that inflation will be calmer. That will permit the Federal Reserve to cut interest rate probably from September, and more cuts along the way. Therefore, mortgage rate to be a little lower, 6%, 6.5% as being the new normal, and that will greatly bring more buyers into the market. More recent survey by the Federal Reserve, New York Federal Reserve, show that overwhelming number of renters. We hear about the millennial generation, maybe they don't want to own anything, they don't want to own a car, but the survey clearly showed that younger generation realized the importance of ownership and the wealth building potential. More than half, close to 70% of renters desire to buy a home at some point in their life. Maybe the current market condition is difficult, but once the mortgage rate comes down, they can realize their aspiration, translate aspiration into the reality of ownership. All the data points towards homeowners steadily building wealth over time, having substantially larger net worth compared to renters. So for American consumers, definitely ownership should be part of your equation on the American dream. Many factors happen in the economy. Many factors influence the housing market. If you have questions, ask the Economist. So great opportunity to submit your questions.